Hi, I'm Roger Wells, CEO of Avex, and you're watching Taking Stock.
All right, let's do this, folks. 2 minutes ago here until the closing bell. Markets taking a little bit of a breather here on Wall Street today after the fastest move from oversold to overbought conditions that the S&P has seen in about 40 years. Let's bring in the great Einstein of Wall Street, the one and only Peter Tuchman. What do you make of the price action today? We got oil markets moving one way, equities kind of flat to the downside.
I think just what you said, it's a little bit of a breather. People are trying to figure out what's going on. Over the weekend, no resolution on what's going on. After the close, after a record close on Friday, the minute we did that, they once again closed the Straits of Hormuz. So there's still, I think the market's completely disengaged. Everything that's going on with the conflict, people are starting to buy the market for a real good reason. They're suffering from PTSD from last February, March, April, like we talked about. They want to get ahead of the ball. We know this conflict's going to be over really sooner or later. So it's completely, it's now just stock market stuff. Today's a constructive day. We opened sort of lower over whatever news that there was nothing positive, anything resolved. And then the market just sort of, it's trying to figure out its footing right now, where to go from here. But my gut is that we keep going higher. Unless, look, we're a tweet away from crazy town, right? So anything can happen. We know that. But the market's strong, and I'm impressed.
Yeah.
Good price action.
And maybe pretty encouraged to see that the market is not closing at session lows by any means. We're well off those lows, even if we finish in negative territory. Thank you for kicking us off. Nice to have you here. Cohen and Steers here to do the bell. More Taking Stock after this. I like that one. We let that one breathe out there a little bit. All right, your final tail of the tape on this Monday, April 20th, the S&P 500 in negative territory, 0.25%. The Dow 30 down 0.01%. That's about as flat as you could get, folks. The New York Stock Exchange Composite Index down 0.08%. How about the small caps? The Russell 2000 up 0.6 on the day. Materials, financials, industrials, those are your strongest performing sectors in the S&P 500. And your S&P laggards today, discretionary, utilities, as well as healthcare, Salesforce, JP Morgan, and Cisco, your big Dow 30 component winners as well. Let's bring in our first guest, Gregory Farinello, friend of the show, head of U.S. rates at Amerivet Securities. Thank you for being here, my man.
Good to see you.
So this rally was incredibly fast last week, and yes. I wonder how you're thinking about that speed. Does the speed with which we got to these all-time highs raise any red flags or concerns for you, Greg?
Well, look, it's moving quick in the end. So we had a drawdown. I think if you look back to April of 2025, we had a much bigger drawdown. So this drawdown was less, and there is some uncertainty in the marketplace. It doesn't raise red flags for me in general. I think the market is nervous, mainly over geopolitical risks. If you look at oil, I think the market is nervous about that. It is interesting because if you look back to 2025, this time last year, it was about tariffs. Now it's about tariffs, oil, a little bit of uncertainty over AI.
Yeah.
So there's a lot more in the mix, but the markets are doing very well, in my opinion.
Do you think the investor base learned anything from where we were 12 months ago, those lows of Monday, April 7th, Liberation Day? It felt like cats and dogs were falling from the sky.
They were falling from the sky.
So did they learn, especially the retail investor base, did they learn what happened last year and say, hold on, maybe we adjust a little bit for 2026?
I think they did. And that's the signal I'm getting. I'm not saying it's going to be a straight line up. We're making new highs here, obviously, in general. I think the markets are in good shape, personally. I think the economy is in good shape. I think the policies in the U.S. are in good shape. I think we will clear what's going on in the Middle East. It may take a little bit more time, and there is some uncertainty, but in general, I think the investor base did learn from last year.
We got about 20% of the S&P 500 set to report quarterly results today and from now until Friday. What is make or break and most important for this market in the next few days?
Well, the bank earnings in general were very solid. And there were some questions around private credit and They disclosed that in general, which I think was important. I think the earnings in general will be good. The forward guidance is a little tricky right now, not only for the corporates, but for the Fed as well and central banks, because they just don't know where this whole thing is going right now. But I think this is going to clear probably within the next month or 2 months. Forward guidance will be limited, but I think earnings are going to be pretty good
Gregory,
going forward.
how contingent is the market momentum on the ongoing ceasefire and those delicate negotiations going on right now?
Well, it's important, right? It's definitely important. I mean, short term, the president has made it very clear that Vice President J.D. Vance is going to Pakistan for these negotiations. If Iran doesn't show up, it could create some short-term turbulence. But ultimately, look, I mean, I think it's going to be okay, and I think markets are going to be okay once this clears. If the president gets to China next month, I think that will be important. If this doesn't clear and he doesn't get to China next month, that could create some short-term turbulence. But we're constructive on markets right here. We're constructive on the economy in general.
That's awesome. Really grateful for your time. Did not get to ask you about Kevin Warsh. We're out of time, but come back as that confirmation process on Capitol Hill continues. Obviously, the president's picked to replace Jerome Powell, going in front of the Senate Banking Committee tomorrow. All eyes on that. Thank you for being here, Gregory. It's really nice to have you.
Good to see you.
Come back anytime. Of course, longtime friend of the show, Skylar will grab your mic. Bobby, you and I will go this way, and we'll talk about the biggest analyst calls that moved tape today here on Wall Street. Deutsche Bank sticking with Microsoft as a buy ahead of earnings next week with a specific focus on Azure results and Azure guidance. Microsoft, the Mag 7 laggard so far here in 2026. Next up, Barclays upgrading Okta to overweight. They say we see upside from agentic opportunities, says the brokerage. Okta shares down about 17% on the year. Finally, B of A reiterating Meta as a buy, however, lowering the price target down to $8.20 a share until, as they say, quote, the advertising environment improves. Bobby, we'll take a look here at two New York Stock Exchange notables that call the big board home. How about MP Materials? Up 9% on the day. Wedbush analysts initiating coverage for the stock as an outperform. They call the rare earths company a champion of the space, giving it a price target of $90 a share. MP Materials up 18% on the year. They will report quarterly results in 2 weeks' time. Hell, take a look here at Dell Technologies. I keep laughing at this trade because what's old is new again. One of the best performers in the S&P today, up more than 80% from their mid-February levels. A lot of these old tech names, they're kind of back in vogue right now. A Dell, a Cisco, an eBay. Dell recently kept an overweight rating by analysts at JP Morgan. All right, Cheddar Zone, Justine Miller recently sat down with astronaut Chris Hadfield. They spoke all about the Artemis II launch and much more. Here now is a look at part 3 of their conversation.
As Artemis II just returned from traveling around the moon, the convergence of space exploration, artificial intelligence, and private capital is redefining what possibilities lie beyond Earth's atmosphere. Joining us now to discuss all of this and more is retired Canadian astronaut, former commander of the International Space Station, best-selling author, and board member of Atomic 6. Yeah, it's incredible to think about. It honestly sounds a little bit like a sci-fi movie. So thinking about something that can actually be built like this is just amazing. You mentioned that now this is possible because of new technology that's finally here that enables this to actually be built. So is there a one main big thing that now is enabling this? I know you mentioned a few other different things that are happening in all of these technological advances, but is there one thing that people need to keep in mind as like, this is the thing that now is making this possible?
We have deep experience in launching interconnected communication swarms or intercommunication satellites, like thousands of them. We didn't know how to do that 10 years ago. But now, lots of people are getting their internet. In fact, I am talking to you from Starlink. And so we know how to do that. The very precise pointing and using of lasers in order to provide intercommunication. So important to a lot of folks maybe don't know, but when you move light through fiber optics, like a lot of people get it at home, it moves through a fiber optic cable, a tube of glass essentially, slower than it moves through the vacuum of space. You can actually increase the speed of what's happening as the light moves through the vacuum of space. That's just sort of an aside. But the key technology is we know how to build laser connected constellations of satellites in orbit. And the next piece is how can we get the cost down low enough so that it's financially viable to put whatever 1,000 satellites up, and the cost of launch because of reusable spaceships, semi-reusable right now, has radically dropped. And the testing that's going on with Starship, 100% reusable launch vehicle and spaceship, that is perhaps going to be the watershed when this truly becomes economically viable. A great big ship, you can put a whole swarm of satellites out, and satellites that can steer and don't hit each other, and then and reuse that entire ship so the cost comes way down. And we're not quite there yet, but we're getting close. And to me, all these things are coming together, and that's why it's really important from a business point of view right now to anticipate it, to look into the future, and to be a first mover.
Yeah, it's amazing to think about. I know you're talking about a lot of different pieces of the puzzle that need to come together here to make this truly viable. When do you think that might happen? Are we talking a few years? Are we talking a decade or so? When do you think we can actually start to see this happen?
Uh, it's shorter than a decade. We're in the few years category right now. But if I said to you, hey, let's build a great, I don't know where you are in the world, but let's say, I don't know, New Jersey. Hey, let's
In New
build
York,
a
yeah.
great, okay, New York. Let's build a big data center in New York. Okay, go. It would be the order of years before it's built because the permitting and the infrastructure and the all of the power and connectivity and all of that stuff, it's years, and it's not cheap, you know. So just because it's not quite here yet and it's not free to do it in space, boy, that's exactly true on Earth as well. And as the demand increases, it opens up a whole new possibility. When you look at it from a yeah, people say the 30,000 foot view, but that's pretty low for an astronaut. But when you look at it from above, how are these two solutions to the same problem actually competing with each other? And if you look in the distant future, eventually we will move a lot of things to space. As our launch gets as cheap and as reliable and as massive as it can, then it'll make a lot more sense to move things to space than right now we do here in the bubble of air that we all breathe. So it's exciting to me that we're at that threshold right now. And I want to be part of the group of people that is looking forward and realizing, how are we going to take advantage of this? How are we going to use it to the benefit of humanity and make things more sustainable so that we're not using up all Earth-based resources just to keep the power plants running.
What do you want people here on Earth to understand about why all of this matters? Why should everyone here be paying attention to what's happening above us in space right now?
Well, the classic example is I don't know, think of Henry Ford, right? Uh, he suddenly realized that uh, horses have a limitation, and the technology and the metallurgy and the engine technology and rubber technology was just getting good enough that maybe he could build a practical car. And there wasn't any real demand for it yet because people already could get everywhere they needed. They had horses and it was fine. And I think his quote was in 1912, if you had asked people what they wanted, they would have said faster horses. Um, but he created a product, the Model T car, that suddenly, even though there weren't good roads, there were no gas stations, or there were no regulations, no stop signs, stop lights. I don't even know how you got a driver's license back in 1912. But by 1915, that the inherent utility of the Model T was so overpoweringly obvious that it took the world by storm. And the whole world transitioned from horses to cars in just a matter of a few years. And you need to look at space transportation in a similar light. It is opening up all new capabilities, and stuff like Atomic Six that I'm part of. They're looking at how do you let people then how do you build the parts so that you have a successful company? But then how do you give people opportunity to take advantage of this new technology?
Well, it's just incredible. Thank you so much for being here, Colonel Chris Hadfield. So much to talk about. I could talk to you for hours. We really appreciate all of your time today. Thank you so much.
Thank you, Justine. Pretty exciting week in space travel and way more to come.
Welcome back to the show. Our next guest joins us now via Zoom. Frederick Griegard is the CEO of Cardano Foundation, here to talk all about the world's first blockchain-based financial attestation. It is great to have you, Frederick, and see you once again. So help me better understand what you and your team just accomplished. You put 7,000 transactions on chain, and then you had a significant auditor, Grant Thornton, go through, didn't verify the whole batch, they verified every single one, and in doing so, you managed to cut audit costs by 50%. What does this mean for how Wall Street might be able to use blockchain?
Well, this means actually everything, right? Because I think it should be a human right that you can trust data from Wall Street. And what we just actually showed is that you can put 70,000 transactions on the blockchain. And instead of doing a spot check like we are used to from financial auditors, they downloaded all of the transactions. So they looked at the whole architecture, took all of the transactions, used machine learning on that, and then came back to us and with less resources did the same work as before, but with the full attestation. Now, then they also used what we call the legal entity identifier, which basically moves 400 trillion in market cap in TradFi today. So this is what we use from JP Morgan to Bank of New York Mellon to UBS in Switzerland. We all use LEIs to identify ourselves. And they use this LEI, which is a non-blockchain based, so we call it off-chain, identifier, which is first level quantum secure, to go in and say, we are Grant Thornton. So it's no longer about trusting from a blockchain to a blockchain, but we are now mixing, what actually established financial trust in all markets, all public markets, right, around the world, right? So we're no longer in just traditional finance or in crypto, and we're using then audit methodology enhanced, and we showed that we can actually do that using less resources. And the next generation of this is even more important because this means that you can now train foundational models on real data, proven verified data. And then suddenly you have an AI spike in terms of usability where you can actually trust the data to a level who has not been possible before. So imagine like a ChatGPT or Gemini, not trained on the internet, but trained on billion companies' verified data. I mean, isn't that amazing?
So why have you, as if that weren't enough, you also tokenized a separate insurance product, but you listed it on a traditional stock exchange. Why? Why do that? And what does that signal to the TradFi community?
Well, we took a reinsurance product, more specifically a product built on top of Hanover Re, which is one of the largest reinsurance companies in the world. And we were looking at it and said, everybody's doing this RWA and tokenization, right? But what we said was, actually, blockchain is now at such a big maturity level, specifically the Cardano blockchain, right? That working together with Arcax, we listed it on the London Stock Exchange, which is a tier 1 stock exchange. So what we actually proven is that there was a lot of people saying, is the blockchain mature enough? Can it tick the legal boxes? Do we have the right type of identity? And we basically took a product which normally you need $100 million to get into at all. So you have to be kissed by somebody, right, to basically be able to do that. But in this case, we put it all the way down to 50,000 as an entry ticket on the London Stock Exchange. And I think this is, again, an amazing achievement in terms of democratizing access to capital markets and to asset classes which normal investors simply cannot get access to. And this was one of the dreams about Bitcoin. One of the dreams about real blockchains was to level the playing field and ensure that all investors around the world, A, can trust data, and B, have access to the same asset classes as only the professional have. So I think this is a huge step forward, and a big shout out to the London Stock Exchange, and hopefully next time it will be a New York Stock Exchange.
But I know that these are huge accomplishments for you and your team. Please come back. We can continue to talk about them. Frederick Griegard, CEO of Cardano Foundation. Frederick, thank you. Don't go anywhere. A lot more Taking Stock coming up live from the big board after this. Welcome back to the show. Jeff Palma joins us now, fresh off of ringing the closing bell here at the big board. He is the Senior VP and Head of Multi-Asset at Cohen & Steers. Thanks for being here. Nice to have you here.
Thank you for having me.
And a great day for the stock, up 2%. You're up more than 8% on the year. Talk to me first and foremost about what brings you and team down here to the stock exchange to ring the bell.
Yeah, two things. We're celebrating our 40th anniversary as a firm this year. Cohen & Steers was founded in 1986, and so we're really excited about that. And then tomorrow we're holding our annual investor conference here at the exchange as well for all of our clients to come.
What do you see first and foremost, the most important components of the big picture investing landscape here in 2026 and how you're approaching that macro outlook?
Yeah, the conference is focused around building better portfolios, and we think it really reflects a new regime of investing that people haven't seen in quite a long time. We're seeing higher inflation, higher interest rates, a very different cycle than people have been used to. And real assets, where we focus at Cohen & Steers, are kind of really primed for this backdrop, we think.
Are there some investment trends that you think more people would benefit from paying more attention to, that's a top priority for you and your team?
Yeah, I mean, one of the things we think is that people have really been following the trends of the last 10 or 15 years. You know, this idea of FOMO, fear of missing out. And, that regime shift, which brings higher inflation and higher interest rates, means people should have something different in their portfolios. This idea of building better portfolios means having things that you probably haven't had before. Things like real estate, infrastructure, natural resources, and commodities. We think build better portfolios for people.
Let me ask you a bit more specifically about AI-driven electricity demand, whether it's the commodity space or the technicals, the mechanics, other parts of the market worth paying attention to, knowing where that demand is, but likely where that demand's going to be tomorrow.
Yeah, so I mean, we know the AI story has been a huge story for many years. It also means that to power AI, you need more electricity to feed the data centers. So if you think about 10 or 15 years, we had almost no increase in power demand. And now we're talking about 3 and 4%. Those are numbers that don't sound really exciting, but when you haven't been growing, to go to 3 or 4% is a big deal for the utilities. And then of course you have to feed those utilities. So you need more electrical generation, more resource utilization, and the build out of those.
Yeah, and especially when we talk about the build out, the infrastructure of that, what is the role for governments, either at the state or local level, or for federal members of Congress, et cetera?
Yeah, and so it's you kind of have to manage the building. You have to manage the rate increases, who's going to pay for those increases. And then, like I said, and just physically building the materials and building the plants, it's going to take years to do that.
Jeff Palma of Cohen & Steers, congratulations on 40 years.
Thank you.
And thanks a lot for joining us here on the show. It's great
Thanks
to have
for
you.
having us. Thank you.
All right, don't go anywhere. A lot more Taking Stock coming up right after this.
Woo!
Time now for a few fintech, crypto, and AI headlines to kick off your trading week here on Wall Street. At this hour, Bitcoin and ETH are both in positive territory, about a percent or so on the day. Solana, the hardest hit of the crypto majors, down about 3% at this hour. Next up, the Bank of International Settlements says stablecoins are behaving more like investment vehicles than true money, warning of market risks without global regulation. And finally, a nearly $300 million hack targeting Kelp DAO's RS ETH token is triggering a major DeFi contagion, with billions pulled from platforms amid fears over ongoing collateral risk. And now Money 2020's very own Scarlett Sieber is back with a whole new edition of Jargon Translator. It's where she takes wonky, complicated finance terminology and helps make it make sense for all of you watching at home. Take a look.
I'm Scarlett Sieber from Money 2020, and this is Jargon Translator. Today, we're breaking down the heartbeat of banking, net interest margin. Net interest margin is the difference between what a bank earns on loans and what it pays on deposits. If a bank lends money at, let's say, 6% and pays depositors 2%, that is a 4% spread, adjusted across the balance sheet. That is your net interest margin. This one number explains almost everything. Why banks love higher rates, why deposits costs matter, and why credit standards tighten fast. A healthy net interest margin gives banks room to absorb losses and invest. A shrinking net interest margin removes margin for error. And in modern fintech banking, net interest margin is a design question. Who your customers are, how sticky deposits remain, and how expensive funding becomes all shape the outcome. Banks don't usually fail because of a single bad decision. They fail when margins disappear and small mistakes, they start compounding. Net interest margin is the difference between stability and fragility. And that is your jargon translated for today. If there's a finance term you keep hearing about and you want the real story behind it, go ahead and put that in the comments and it just might make the cut. In the meantime, back over to you.
All right, tomorrow Wall Street in the morning, we'll get quarterly results from UNH, GE, Aerospace, RTX, and 3M. And this time tomorrow, Tuesday after the bell, the latest quarterly numbers from United Airlines. Tonight, Game 2 for the New York Knicks at the world's most famous. That'll do it for today's edition of Taking Stock. Thanks for watching. We'll see you again tomorrow.